Hi everyone, good afternoon and thank you for joining me. I'm Angela Calla here, mortgage expert at the Angela Calla Mortgage Team and author of The Mortgage Code. Passionate about financial literacy, passionate about helping you get ahead financially. It's all what we know and sharing is caring. So if you're joining us today and you've been tuning into our financial literacy series, we are now on tip 5 of 9, which is going into the power of debt consolidation. This is something that you hear a lot about and you wonder, what exactly does debt consolidation mean? Let me break it down for you. If you're someone who owns a home and let's say you also have a car payment that could be anywhere from $400 to $800 a month. Maybe you have a line of credit payment that is $200 or $300 a month. And maybe you have a credit card payment that's $200 or $300 a month. What that is doing is actually generally at a higher interest rate, over 2%, which is where kind of the average mortgage rate is today. And when you're making payments towards that, often as consumers, we're making the minimum payments. We're not making payments that are over and above that. And what most people don't know is that actually takes away qualification for you for a mortgage. So if you're someone who's paying between their car payment, line of credit, credit card, student loans, if you're paying $800 a month outside of your mortgage and outside debts, that's actually taking away $200,000 in mortgage qualification, because that's how much a mortgage payment would be in terms of the qualifying rate for a mortgage. So if you're someone who lives in a condo, you might have a beautiful child, you're considering moving to a 2-bedroom or a 3-bedroom, what you don't know is that by having those debts outside your mortgage, you're not necessarily paying that debt effectively. So what you can do is you can look at your existing mortgage, you can look at your outside debt, and provided that you have enough equity, you can break your existing mortgage, include the amount of, say, the car loan, the credit card, the student loans, and what you do is you add that amount to your mortgage, and now you reduce your monthly payment significantly. And I don't know about you, but I feel that we all have the same 24 hours in the day, and if you're already working full-time, and especially being a parent, homeschooling, activities, all the things that come along with it, it's impossible to increase your income that much in most cases to be able to do that. So I ask you this: if you have debt outside your mortgage, and also I'd like to say with that, because generally we're spending so much money on debts outside of our mortgage, it's so hard for us to save. But if you increase your cash flow by increasing your mortgage and paying out that outside debt, you're improving your credit score, you're improving your qualifications, but now you can start to really think strategically about where your money's going. And if you were used to paying that $800 a month extra, as an example, well, now what you could do is you could deploy that money in a much more financially advantageous way. As an example, you can set up an emergency account. You can set up a side account that has money available for a deposit for a down payment for a new home. You can make that contribution to your RRSP, and depending on where your tax bracket is, you can actually get a refund back to build your wealth further and pay down your mortgage if you choose, and also build for your retirement. And also, if you have young children, you'll want to take advantage of RESPs as well, because the government does match those up to a degree, and you can have that compound interest working to your advantage. And if you ever thought, well, gee, I don't know, I don't want to add that debt to my outside mortgage, if you look at what your credit card statement says, do yourself a favor, and the next time you get a credit card statement, circle that big part that says how many years it'll take you to pay it off, making the same payment. And if your answer to the question is, I'm not getting a work bonus in the next 3 months, which will contribute to me being able to pay off my debt, I'm not going to be getting the proceeds from a sale of an asset that'll help me pay out and eliminate my debt, or I'm not going to be receiving the proceeds of an inheritance in the next 3 months to pay off your outside debt. Right now, it's absolutely the smartest financial strategy to improve your cash flow, start building your wealth instead of paying unnecessary interest, build your own financial portfolio instead of the products that make the most amount of money for the bank, and empower yourself to learn about what your options are for debt consolidation. And it will improve your credit score, improve your qualifications, and improve your quality of life. We've talked a lot about the numbers behind it and how that could help you, but think about the emotional and physical removal of stress from your life when you actually have that ability to empower yourself, and instead of paying all those things out every month to somewhere where you're not seeing a benefit, now you're paying yourself that. Now you're paying your own mortgage down that. Maybe you're not taking that extra overtime shift that's being taxed double anyways. Maybe now you can sit and help your kids more with their homework. Maybe you can finally afford that tutor that your little one needs. Whatever it is, you deserve to live the best quality of life, and debt consolidation into your mortgage is the best and most strategic and empowering way that you can do that. If you have questions about any of the topics that we talked about today, please know you can count on Kala and you can count on my team to make the proper introductions to make sure you live your wealthiest life. Sharing is caring. Thank you for joining us for part 5 of our financial literacy series. And I hope you'll join us next week, where we'll be talking about another financially empowering solution that you can have to help get yourself ahead financially. And if you've missed any of our previous ones, make sure to check out our Facebook page and enrich yourself with that knowledge so you can take that and empower yourself to move forward. And we're happy to partner with you in any way possible. Have a great day and stay safe.